Today is Wednesday, September the 4th, and what the market took away from us yesterday gave it all back to us today, and presumably that was because of some relief on what's going on in Hong Kong. Does that mean that the Chinese will now have more time to consider negotiations with the US on the tariffs? I think that's unlikely, but we got back what we lost yesterday. The Dow, all three markets opened up with a big jump and then just drifted slightly higher for the rest of the day. But look at the volume in the Dow, very low. NASDAQ volume that we've come to expect, and the S&P 500 relative volume also a little bit low. So trading volume was a little bit low. That's something to be keeping in mind. The advancers led decliners by a factor of 3 to 1, which is going to take our market oscillator back away from the neutral line and probably right back up to where it had a double hit on Thursday and Friday of last week. Let's see if the momentum can continue to carry us on up to this overbought line, and expect a little bit of pullback then. But there's some interesting things in the charts. First of all, let's look at the VIX. And the VIX fell back into this 70% region where it's been trading since 2015. 70% of the time the VIX spends in between this area and this area, and we've fallen back into that relatively comfort zone again. The S&P, big jump of 31 points. What did we see? We said that overall we thought the S&P was going to move up, but was going to be choppy in the cloud. And yesterday we called for a pop, and that's what we got. Tomorrow I'm calling for possibly hitting the 50 simple moving average. We've passed over the 50 EMA. But I think once we hit that 50 simple moving average, then we'll have a little bit of a pullback. So tomorrow being Thursday or Friday, we should see a little bit of a pullback, and I don't see us going over 29.45 for the rest of the week. Could be wrong. Let's look at the Chiku span. Chiku span didn't actually reach the 50 EMA to get resistance. So the Chiku span wasn't in play for us, but the cloud certainly has caused us now of a few weeks of really getting nowhere. So that's what happens when you're in the cloud. You're sort of flying blind, but we still have tremendous way to go to exceed resistance or to hold support. Caterpillar, nice little jump. We said Caterpillar should resume its move up on good news from China, and that's what's happening. GDX, I tweeted that I added a little bit more of GDX, and I was looking a little bit more at the chart, and I'd forgotten about these three gaps that had to be filled. So let's look at how those gaps were filled. We jumped over this gap, but then came down to test it, then came down to fill it. So this first gap, gone. This gap was filled right, let's see, where was it filled? Well, it was certainly filled come on. It was certainly filled right there, if not sooner. Can't see under the, I'm not going to bother pulling the candles on top of that gap. We just know that it's been filled. And then this last gap, cleanly filled last week, and we've made a relatively new breakout today. So despite the market being up, people are still buying gold and the gold miners. So I have more than a typical position that I would have of 1,000 shares. I've now got 1,300 shares of GDX, and it's providing me not only with a bit of safety, but lately it's been with a little bit of upside even when the market has been doing well. So GDX is a good one. In terms of Fibonacci's, we returned to a previous high of 3179 as being our next target. 3179 is where we could very well be going over the next couple of weeks. I'm going to reintroduce AT&T because with low interest rates with the Fed, people are looking for dividend stocks, and that's pushing AT&T up out of this channel that had been in since November, where it came down, hit the top of the channel, came down, the bottom of the channel, top of the channel, bottom of the channel, top of the channel, bottom of the channel, breakout, but pull back to the 200, and now for some time now we've been out of this channel, but we stopped at 50% of this wave right here, this down wave, and I didn't pick this point because we spent too much time fighting right here with these three candles. So I used those to create a trend line and also to anchor my Fibonacci line 100%. So we hit cleanly the 50% today. Let's just pull that out here so we can see how cleanly we hit it at 35.82 and then had a pullback. So we're going to look for a little bit of choppiness at this 50%, and then once we have some commitment from more buyers and all of the sellers have been exhausted, we're going to move up. But we've seen relatively low volume in GDX, in fact declining volume, so something to also take a look at, but I'm still convinced that it's a good stock to be holding on to. Whirlpool, we said Whirlpool was going to be choppy, and we said we were going to move up today. We moved up. We're still choppy. We're in the cloud just like the S&P. The Chiku span broke through the 50 SMA and stopped at the 38.2. We ended the day right at the 38.2% retrace of this up wave. We didn't quite get a pullback to 68.1. The 200 simple moving average seemed to be where people were willing to step in and buy Whirlpool. So that's a good stock to hold on to. But once again, this trend line, which goes back to May of last year and has been so important, provided a stop for us yesterday and today after Friday being support. So that trend line is still important. We're going to have to look for a clean break and a move up to the 50 simple moving average, which I think is in the cards. Snap, we're still waiting for something to happen here. It broke out of its channel, but it's in the cloud. It's just not at a place to buy right now. We could put an alert right at the top of the cloud at 1620 and then look for confirmation the next day for its ability to maintain its position outside of the cloud. But look what's happened here to the Chiku span. It went into the gap, and now it's going to run into resistance by these candles. So that's going to hold back any upward motion in Snap, and I'm not ready to jump into that stock quite yet. As I said yesterday in the video, this is my last video now until September the 15th. Where I'm going, I just won't have reliable internet connection, and I'm not bringing a computer with me. I'll have an iPhone, so I'll be checking on the markets. I'll tweet a few things, but I won't be able to do any technical charts. I'm very grateful to the 30 people or so who look at these videos every day. They have helped me become a better focused trader, and I'm enjoying the best year that I've had in a few years. I think as a result of being able to explain my technical strategies to you. So thank you very much, and I hope you'll still be back when I see you on September the 15th. I will do something the evening of the 15th when I get back. Actually, maybe not. It'll be late, so it might be the 16th. Thank you very much.